Hello everybody. Have you ever wondered what a 1031 exchange is? Have you ever seen how or read on TV or YouTube and how investors save a lot of money in taxes by doing a 1031 exchange? So I want to go over that because I had a client, somebody referred me a client last night, and they were asking all these questions, and so I want to address them. So first, majority of the agents never really do 1031 exchanges. Because it's not that they're complicated, but there's a lot of technicalities that we have to be aware of. And a lot of agents, sometimes they don't take the time to learn that. And so it's sort of a specialty within the industry. And I didn't know about this, but I just got lucky at the very beginning of my career 16 years ago. My first year, I sold about 18 properties, I think, 18 or so. I think like 14, 15 were exchanges, 1031 exchanges. It just happened to be that way. I didn't know. I had a lot of problematic files at the very beginning. I remember my escrow officer used to tell me, gosh, you're gonna get a lot of experience because you're having a lot of headache files. And that usually brings a lot of experience. And yeah, she was right. So I gained a lot of experience my first year, and majority of them were 1031 exchanges. So what's a 1031 exchange? A 1031 exchange, it's an IRS code that allows people who have properties that they don't live on to be able to sell them without having to pay taxes right now. Taxes are deferred. Okay, so here's an example. Let's say you buy a vacant lot, a commercial building, a house that you don't live on because you're gonna use it as a rental, apartment complex, 4 units, industrial building, whatever it is that you're not gonna occupy it as your primary residence. When you file your taxes, you file an address as your primary residence. And then if you have any other properties that you own, regardless of the type of property, you're gonna list them on your taxes as a non-owner occupied property. So those are by the IRS rules, that's an investment property. So when you have investment properties, right? Properties that you don't live on, properties that you don't occupy, you incur what's called capital gain tax. Capital gain tax is the increased value from the purchase to the sale. For example, if you bought a property for $100,000, an investment property, and then you sold it for $200,000, that means you have a gain of $200,000. That gain is called capital gain tax, and that gain is taxable. 24% is usually what it comes down to, except I've seen some CPAs, some certified public accountants, and some 1031 experts who say that is more like 33%. I have never seen that in 16 years. It's always I've always seen it at 24% because it's 14% for the state and 9% for the federal. Nevertheless, I'm not a tax advisor, so check with your local tax advisor. Okay, so you sell an investment property, and on that gain, you're subject to pay 24% capital gain tax. So that's a lot of money. So if you gain $100,000 on a property, you have to pay $24,000. That's a lot of money. So how do you defer that? So you defer it by selling your investment, and you never touch the money. You do what's called a 1031 exchange. The money, when you sell it, it goes to a 1031 exchange accommodator. Somebody else holds the money for you, and then that accommodator wires for your next purchase on another investment. So then now that $24,000 gain I was just talking about, it gets deferred. You don't have to pay it right now. You don't have to worry about it. The misconception is that people think that, okay, I'm gonna sell that investment and I'm gonna buy a property I really want and I'm gonna live on that. Then it's not an exchange, because it's the actual name of the code is 1031 like for like exchange. But like for like doesn't mean same kind of property. It means investment for investment. So you could sell a commercial building, you could sell it and buy a vacant lot, you could sell a vacant lot and buy apartment. It doesn't matter. What matters is that you're not gonna occupy any of those properties as a primary residence. That's what like for like means, investment for investment. And you're not gonna live in it. The moment you live in it, now you're subject to capital gain tax. The moment you take the money out of the sale of the property, which I've seen before, somebody called me and said, hey, I want to do an exchange. I already got the money. What do you mean? Yeah, I already closed escrow. I got my money in the bank. I want to do an exchange. I have to pay taxes. No, it's too late now. You do not have access to those funds. The money has to be transferred somewhere else. You cannot have a hold of that money or the proceeds of the sale of an investment. It has to go to the accommodator. Then you go shop around, you find a property, and then the accommodator acts as your bank. They wire the money for you on your purchase. Okay, so when do you pay taxes? As long as you don't sell that next investment, you don't have to pay taxes. That's the advantage of doing 1031 exchange. That's how a lot of people who own mega buildings started. That's a wealth building tool. You buy a little house that's affordable, and then you sell it. Then you buy a duplex, and then you sell it. You buy a fourplex, and then you sell it. You buy a 10plex. You sell it. You buy 40plex, whatever it might be. And you do that multiple times, and before you know it, in your lifetime, you end up owning 100 different properties, and they're all either duplex, triplex, fourplex, whatever it is that you exchange to, if that's what you did. So then now you exchange into another property. The moment you sell that investment, so then now that investment is subject to capital gain tax, plus you owe the previous one. So now you're gonna get hit with both. But the smart thing to do is to never cash out, sell to cash out on any investment, or sell it and be aware that you're gonna be subject to capital gain tax. Okay, so that's the explanation of 1031 exchange and what that is and how it works. There's other criteria that has to be met. There's other technicalities that have to be met. It's very, very technical. If you have any questions on that, feel free to comment, send me a text, send me an email. We can talk about it, for just sharing purposes. But then that's where some agents get caught up on. They're not familiar as with the technicalities. Anyway, 1031 exchanges should definitely be part of a wealth building tool, because it is. Anyway, I hope you liked the video. Feel free to please like. I know liking the video allows to expand and grow, so that other people could easily find this video. And if you're looking to sell your home here locally, feel free to call me. My info is below everywhere. You can just Google Carlos Cabrera Realtor, and I come up everywhere. All right, cool. Thank you. Talk soon. Bye.